how private trusts pay no state income taxes. You heard it. You heard it correctly. This is the foundation, and this is what we're going to discuss. I think it's getting to a point where I generally speak clear and concise, right? But I also kind of leave things unsaid. I think we're getting to the point where the unsaid things I'm going to start saying. So this is going to be a great episode, in my opinion, right? Because I'm open to very open to saying some things that I generally don't say just in the public, right? This is not a tax session for advice. I'm not giving legal advice, tax advice. I'm not a lawyer. I'm not an attorney. I never will be. I cannot offer legal advice. But legal is, generally going to be statutory. And when we're dealing with private trusts, we're not talking about statutes. These things aren't governed by statutes. So there are powers that private trusts have that statutory trusts do not. And I'm pretty sure that all attorneys that deal with trust invoke the state's jurisdiction, as makes sense to me because they have a state bar card. It's a conflict of interest. That's just my personal opinion. But I'm going to get into it. I'm going to be a little candid. I also have an announcement to make, but I'm going to leave that towards the end. So, how private trusts pay no state income taxes. Welcome to the foundation. I am Sot L, seeker of truth L, speaker of truth L. And let's jump straight into it. Be sure to check out welcome to thefoundation.com. Sign up for the email list. As I said, I got something for y'all. So, stick around and we'll talk about that in a second. But I don't want to deviate or digress from the actual specific topic that we're on, right? The specific topic. And that is how? How does a trust not pay? How do private trusts not pay state income taxes? I found this article. You guys know that I don't necessarily like to create my own stuff. And not that I'm not good at it, but the stuff in the public tends to get more validity. When people look at a document or an article or anything of that nature and they see, welcome to the foundation or the foundation on it, I've generally perceived the fact that if the person promoting the thing is the actually the one who's producing the information, I don't know what it is. It's a human psychological thing. I'm not sure. So I generally like to use publicly available sources, things that you can find, things that you don't need me for, right? But this is WellSpire. And this is a fact. How are trusts taxed? Frequently asked questions. Do all trusts pay income taxes? It depends. This is the answer. It depends. Right? And that's what I want to start this off with. It depends. It depends on the administration. It depends on the jurisdiction. If you're dealing with a private trust, doesn't necessarily depend on the jurisdiction because the jurisdiction is private, but it depends on the administration. Then you have the thing with statutory trusts where the state looks to determine the residence of the trustees to determine the tax liability of the trust, so on and so forth. Maybe we'll get into that, but the bottom line is, it depends. A trust is a separate legal and taxable entity. Whether the trust pays its own taxes depends on whether the trust is a simple trust, a complex trust, or a grantor trust. Off the top, grantor trusts do not pay their own taxes. The individual, i.e. the grantor, is responsible for any taxable event with regards to that grantor trust. Simple trust and complex trust pay their own income taxes. Grantor trusts do not pay their own taxes. The grantor of the trust pays the taxes on the grantor trust. I could have just kept reading, huh? I apologize, y'all. I'm not attempting to waste your time. It's just one of those things, I know this stuff is real. I know the benefits of private trust administration. I've lived it for over a decade. It's just one of those things. Maybe if you don't experience it, you don't comprehend it, you don't understand it. Even when people see it, the expectation is that, oh, this is very, very complicated. It's not complicated. It's not complicated. It's different, but it's not complicated. See, we've been taught to, quote, do business with the individual in a way that is anti beneficial. And then most people get LLCs and they start their own business, but they don't spill out that, quote, special form on the federal level. So understanding these things, I know people have been in certain situations. People have, administered an LLC or a corporation or what they thought was a private trust for a year or two. And then when it comes to the Internal Revenue Service, state and federal, they come to find out that they were not doing what they thought they were doing, and they were not getting the benefits that they thought they were getting. It's because the education is lacking. How do I know if a trust is a simple trust? A simple trust is a trust that A, requires all trust income to be distributed at least annually. It can be at least once a year. It can be more than once a year. And B, has no charitable beneficiaries. And C, makes no distributions of trust principal. If the trust does not meet the above definition of simple trust, it is usually either a complex trust or a grantor trust. Notice how they don't speak on complex trust. The IRS kind of does that too. It's I don't know, kind of obvious to me why they don't. I'm not gonna teach you how to compete with me or teach you how to take, assets or wealth or profits from me. And that's what it'd be. A grantor trust is a trust through which the grantor is treated as the owner for the income tax purposes. Let's keep going. Grantor trust, because we know it's not that. Grantor trust, in my opinion, is the worst trust. The worst trust. Does the trust file its own income tax return? Yes. If the trust is a simple trust or a complex trust, the trustee must file a tax return, or the trustee can cause for a tax return to be filed. The trustee, him or herself, doesn't have to do it themselves. I just want to be clear. You can cause for it to be filed, i.e., contracting a CPA, enrolled agents, so on and so forth, to, prepare the return on behalf of the trust. Just to be clear, they try to make it seem like it's so complicated and there's all this extra stuff you have to do. It's the same thing as, I wouldn't say take your trust to, H&R Block and get it. They're going to charge a lot. Most people hear the word trust and think family wealth, lots of money. But if you're just reestablishing your private estate and you're still just building that wealth floor, I wouldn't really recommend it. But, once again, it's not that complicated. The trustee must file a tax return for the trust 1041 IRS form. If the trust has any taxable income, gross income less deductions is greater than zero, or gross income of $600 or more. So the form 1041 must be filed if the trust has any taxable income or gross income of $600 or more. So gross would be altogether. Net would be after expenses. What was netted versus what was grossed. Now, excuse me, we're just talking about the tax return. We haven't really got to the point of, having to pay taxes. For grantor trust, it depends, grant, blah, blah, blah. We're skipping that. If the trust is its own taxpayer, does the trust also have to file a state income tax return and pay state income taxes as well? Ooh, this is a good question. Yes, if a state has jurisdiction over the trust. This is a very, very specific scenario. If the state has jurisdiction over the trust will have to file a state income tax return and pay state income taxes in that state. Each state, blah, 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 blah. Each state, da, 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 New York, da, da, da. Because each state has different rules for imposing income taxes on trust, it is impossible for a trust income to be taxable in multiple states. However, it is possible for trust income, and I've read Supreme Court cases with regards to this. States, they like that revenue. However, if you know these rules, you can reveal opportunities to reduce or eliminate a trust state tax liability. For example, if the grantor resided in New York when the simple or complex trust was funded, New York state tax liability may be eliminated by replacing a New York trustee with a trustee who is not a New York resident, as long as the trust has no New York situs, assets, or New York source income. Yeah, the trustees can change the situs or domicile of the trust at any time. But once again, I left it highlighted if a state has tax jurisdiction over the trust. And I'm going to say straight up, private trust, no, it doesn't. The trust owes its existence to the contract, not to any state statutes. And within the trust indenture, the state jurisdiction is not invoked. So there's the answer. But we'll go a little bit further. Income distribution deduction. To determine the trust income distribution deduction, you must first calculate the trust distributable net income. D&I is defined by Internal Revenue Code. Generally, it is equal to total trust income, including tax-exempt interest, but excluding capital gains or losses, less deductions, such as state tax paid, trustee fees, and tax return preparer fees. If the trust total distributions to beneficiaries is greater than the distributable net income, the income distribution deduction equals the distributable net income tax exempt interest. If the trust total distribution to beneficiaries is less than the DNI, the income distribution deduction plus equals total distributions. If the trust claims an income distribution deduction on its tax return, the amount deducted gets passed to the trust beneficiary on a Schedule K-1, and the trust beneficiary must report the Schedule K-1 income items on their personal income tax return. I'm just going to tell you, the beneficiaries of a private trust is not an individual. That would not make any sense. Not to me, anyways. Not to most of us in the private. So individual income tax requirements reporting do not come into play with regards to a properly administered private estate. And when I say estate, I mean just, multiple trusts. There's a family trust, there's usually an asset trust, there's a business trust, the whole thing. The entire thing. The entire thing. Under this 65-day rule, did you guys know about this? Under the 65-day rule, a trustee can make distributions to trust beneficiaries within 65 days after year end and treat those distributions if they were made in the previous year. The deadline for this distribution is March 6th. Also, March 5th in leap year, an irrevocable election must be made on the trust income tax return to treat the distributions made within the 65-day window as made in the prior tax year. I am not going to speak on that. I'm not. Because, I don't want anyone to get the wrong idea. There's a fine line between tax avoidance and tax evasion. Evasion is illegal. I have a responsibility, when it comes to what I say on this platform. But as far as private trusts that we administer, as private trustees, those who, have been through our training course, when trustees follow the training, the private trust does not file a state return. There is no requirement for state income taxes. There's only a federal return. A trust can distribute 100% of its taxable income to its beneficiaries. I'm sorry, a complex trust, specifically a complex trust, can distribute 100% of its taxable income to its beneficiary. And who's the beneficiary? The family trust. Think about it. You have an LLC. The LLC makes profits. It takes its allowable deductions, right, on its 1120 corporate return according to statutes and federal law. It distributes or disperses its taxable income, or the remainder, let's just say that, the remainder after expenses, to its shareholder, the shareholder being the business trust. That is income that is effectively connected with the trade or business with the United States, because the business trust received income or currency or finance from a U.S. citizen. Let's just say corporations are U.S. citizens. Oh, yes. Corporations are persons. So the income, quote, or distribution, right, that the business trust received is effectively connected with the trade or business within the United States. Now, once the business trust takes its allowable deductions according to the contract indenture and it distributes its taxable income to its beneficiary, which is a private trust, now the private trust or the beneficiary has now received income that is not effectively connected with a trade or a business within the United States, because that income came from a private contract. It came from a private trust. That's what I'm going to say. I don't know. I don't know if you understand what that means, right? And, when I kind of leave things unfinished, I just want you to research. I want you to do your own research. I want you to do your own research. I don't want you to trust what I'm saying and, oh, that guy Sot said it, so I'm just gonna go do it. I don't suggest that. What I do suggest is that you have an open mind and that you hear what you're being told, not just by me, but you hear what you're being told and you trust but verify. Go verify. Verification is important. Very, very important. But when you understand how this system works, just enough, you just gotta understand how it's just tearing you up. Right? That's it. And a lot of it has to do with finances. When you understand how this stuff is tearing you up, you can start making moves to address it. And one of the first moves that you can do is set up a private trust. I would suggest at least 2, but we teach you that here in Trustee training. Now, real quick, we have our foundation trustee training. What I wanted to tell you guys, what I saved for later, is that we're doing a promotion. Excuse me. And we're just going to do it for the next 2 weeks, right? For the next 2 weeks. And this is, I remember last time we did a promotion, it was only to email list subscribers. It was just that. Now this time we're doing a promotion for just the people who check out the episodes of the show, wherever you check it out at. So if you listen to this far, I just want to let you know that we are having a promotion, and that promotion is no matter what tier you sign up for, you will get half off of the one-time startup fee. Half off. So if you're silver tier, your startup fee will be $500. Gold tier, your sign-up fee will be, what is that, $1,500 plus $250? $1,750. One-time sign-up. And then $2,500 for the platinum. One-time sign up. Also, during this promotion, if you sign up for the gold or you sign up for the platinum, your monthly is the same as silver. Same as silver. Now you have to email me, admin@welcometothefoundation.com, to take advantage of this. I was attempting to set this up in like the I don't know, the what is it called? The merchant part of the website just wasn't working. I'm going to continue to work on that. And when I get that figured out, I will update the website. But until then, you're going to have to email me, admin@welcometothefoundation.com. Half off the startup fee, the one-time startup sign up, got to get you in the system, get you sorted. And all tiers, the monthly is the same as silver. We'll get you set up. 2 weeks. It's a limited time offer. Let me check my calendar. So you got 2 weeks. 1 week is the second. The next week. Let me try this. Where's my thing? Oh, the second and then the 9th. So September 9th is the last day. 2 weeks. But I think this is, hey, I think this is a great deal. 100%. Beautiful deal. Luxurious. admin@welcometothefoundation.com if you want to take advantage. Also, we got a special Sunday show coming up. I would say a good friend, definitely a mentor of mine, Lamont Maurice L., Consul General. He'll be on the show. We're gonna start doing that expansion on the topics of the foundation, as we've been speaking about, as I've been talking about for probably the past 6 months. It's just been taking a minute, and I want to do it the right way. Haste creates waste, and this channel is for y'all. It's not for me. It's for y'all. So I just want to do y'all right. But this brother coming on, you're going to understand why. You're going to understand why he's going to come on the show. But that's this Sunday. I don't know the time. I think it's 5 p.m., 6 p.m. Eastern. It's either 6 p.m. Eastern or 7 p.m. Eastern. I got to double check. I don't have my notes, but it's going to be a wonderful thing. I'm really excited for it. But yeah, admin@welcometothefoundation.com if you want to take advantage of the promotion. With that being said, I'll catch y'all tomorrow with current events. Y'all enjoy yourself. Take care of yourself. Make sure you say 10 things that you are thankful for before you go to sleep tonight and every night. It's very important. And I'll catch y'all tomorrow on current events. Peace, y'all.